Hey guys, it's Kane Matuk here. Today we're going to be breaking down Warren Buffett in his first ever TV interview. Something important that he said is that don't feel like you're missing out on anything. Especially in the investing world, there are plenty of opportunities, whether it could be, BitConnect.
BitConnect! BitConnect! BitConnect!
I'm sorry. I know that some of you may feel like Tony Stark when it comes to stocks and finance and investing. But it really doesn't have to be so complicated. I'm Kane Matuk, and I'll make it simple for you guys. Let's understand wealth. I think it was done in the 80s, but the principles in it are timeless, especially for investing in the stock market. And I think back then it was such a shock because the things he was saying is so different from the norm, and it still is today. And just a lot of people don't do it. There's a lot to learn from it, and I'm going to be going through, and I have a lot of tips written down in my notebook. I'll be going through and sharing what I learned from it personally, and my analysis, and I'll explain from there. Okay, let's get into the video.
Others with a more secular approach who have also been very successful. Let's take Warren Buffett of Omaha, Nebraska. If you had put $10,000 in 1965 into his company, Berkshire Hathaway, you would have $1 million today. Warren was a chapter in my 1972 book, Super Money, so I've known him a long time. He learned his trade with Ben Graham, the original dean of security analysis at Columbia University. I don't think Warren has ever been on television until this interview, and he has certainly never courted publicity, but recently he got a lot of it when he emerged as the key figure in the takeover of ABC by Capital Cities. Warren will be the largest shareholder of the new company, and his own net worth is now far in excess of $500 million. But when I spoke with him last fall in his office in Omaha, he very characteristically made his investment style seem so perfectly simple.
The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule, and that's all the rules there are. I mean, if you buy things for far below what they're worth, and you buy a group of them, you basically don't lose money.
Okay, first tip right there in the first sentence, don't lose. He says this a lot, like a ton. Don't lose. And the second rule is remember the rule number one, whatever it is. Basically, the way I interpret it is, of course, obviously don't lose, but do whatever it takes to succeed. Whether it is watching YouTube videos, whether it is reading books, talking to professors, talking to experts in the field, do whatever it takes to be successful. Another thing is that he talks about buying below market value, and then he also mentions to buy a group of them, or just a lot of them. I think that's really important because if you see something that's cheap, he talks about how he made most of his net worth by just taking a swing at it. If he sees a great deal, he's not going to just buy a few. He's going to buy a group of them and then just hit it out of the park.
Warren, what do you consider the most important quality for an investment manager?
It's a temperamental quality, not an intellectual quality. You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Because this is not a business where you take polls, it's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
Okay, there's a lot of points in that. My professors at school actually talk a lot to his points too. So what he said is basically keep it simple, right? You just gotta keep it simple. You don't need a high IQ to go and do what he's doing, which is obviously investing in companies, buying stocks, things like that. Now, why don't you need a high IQ? People just try to overthink it. It's that simple. You don't need to overthink the stock market. You don't need to, he's gonna go on and say like three-dimensional chess. Yeah. You just need to know your numbers. You need to know what the value is worth. You need to know experience, but you don't need to know, everything there is to know, which is actually comforting for all of us to know because I certainly don't have the highest IQ ever, but I do feel confident about the things I do know. Another tip that he gave in that segment is do not look at what other people are doing. I see this all the time, all the time, especially on YouTube. People look at what other YouTubers are buying, especially stocks. They'll see their stock portfolio and they'll just go buy the same thing. Or they'll go see, their friends are buying this, they're talking about it, and they'll go buy what their friends buying. It doesn't matter what other people are buying. You just need to know what you know and feel confident in it, and that will help you be successful. I mean, just because other people are doing it doesn't mean anything, especially in stock. Another big point that he brings up is that you can't get emotional, especially in the stock market. The stock market is brutal. So if you invest in the stock market and your stock keeps going down and down, don't get emotional about it. Don't be panicking and selling all the time. People do that all the time and they just take their losses. That's how you lose a ton of money in the stock market. You need to have the right mentality. You need to think, if the stock goes down, you're just going to buy more. You need to be confident in the company that you're investing in, and I'll get more points to how to be confident in that. But if you get too emotional, that's the biggest way to lose money. Stick with it. Eventually your stock will probably go up. Statistically, the stock market goes up an average of 7 to 9% every single year for the past over 100 years. So obviously some stocks do go down, keep going down, but most likely it will go back up. Don't panic sell. Don't just sell right away.
Warren, what do you do that's different than 90% of the money managers who are in the market?
Certainly most of the professional investors focus on what the stock is likely to do in the next year or two, and they have all kinds of arcane methods of approaching that, but they do not really think of themselves as owning a piece of a business. The real test of whether you're investing from a value standpoint or not is whether you care whether the stock market is open tomorrow. If you're making a good investment in a security, it shouldn't bother you if they close down the stock market for 5 years.
Okay, I'll just talk a few points about that. He talks about basically not worrying about statistical variables. I'm going to university here. I'm studying finance. That's a lot of what we do. We worry about statistical variables. But someone like Warren Buffett and many other successful billionaires do not worry about those variables, because a lot of time they're just BS. They really are. He talks about, instead of worrying about the variables, what I mean by statistical variables, I mean things like what day of the week it is, what time do you need to sell at. We talk about like, is it an election year? Oftentimes election years have other crazy low spikes or crazy high spikes. Talk about buying on weekends, all sorts of nonsense. But he just focuses on buying long term. If you're just focusing on long term, if you have that mindset that I'm just not going to worry about short term fluctuations, I'm just going to invest for 3 to 5 years, then all this is just noise. It doesn't matter to you.
All the ticker tells me is the price. And I can look at the price occasionally to see whether the price is outlandishly cheap or outlandishly high. But prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
Okay, this is probably one of the most important things for buying stocks. The stock ticker price does not tell you anything, really. The price could be $10,000, it could be $2, it could be $100. It really doesn't matter. Now, I'm not going to go to super depth about how the stock market works, but basically the stock ticker price only tells you perception, and that's an important thing to know. It doesn't tell you anything about the value of a business. If Amazon is at $2,000 and Walmart's at $100, which I think they're near to right now, it doesn't mean anything. It doesn't mean that Amazon is worth 200 times Walmart or 20 times or whatever it may be. All it tells you is that there's quite a few variables that it tells you, but basically it's just perception. How much are people willing to pay for it? How much are people willing to sell it for? That's all it tells you. So what he's saying is that you need to know your business statistics and know your facts and know the value of the business, but you really need to believe in the vision of the company and where you believe it's going to go, how successful it's going to be in the upcoming years.
So Buffett chose to stay in this world, Omaha, Nebraska, where corn grows just minutes from downtown. Now, Omaha is a nice town, but nobody claims it's a world financial center. Here, the only thundering herd is actually on 4 feet. Don't you find Omaha a little bit off the beaten track for the investment world?
Well, believe it or not, we get mail here, and we get periodicals, and we get all the facts needed to make decisions. And unlike Wall Street, you'll notice we don't have 50 people coming up and whispering in our ear that we should be doing this or that this afternoon.
You appreciate the lack of stimulation here?
I like the lack of stimulation. We get facts, not stimulation here.
How can you stay away from Wall Street?
Well, if I were on Wall Street, I'd probably be a lot poorer. You get overstimulated in Wall Street, and you hear lots of things, and you may shorten your focus, and a short focus is not conducive to long profits. And here I can just focus on what businesses are worth, and I don't need to be in Washington to figure out what the Washington Post newspaper is worth, and I don't need to be in New York to figure out what some other company is worth. It's an intellectual process. And the less static there is in that intellectual process, really the better off you are.
Something he also discusses that you don't need to be close to Wall Street. You know, he's in Oklahoma, Nebraska. You wouldn't think that's a financial center like perhaps New York is, or even Los Angeles or other cities like that. He discusses the idea of how listening to others can make you paranoid. I think that this is really profound, especially in Wall Street. You know, everyone's getting little insider tips. Everyone's someone's tweeting something or, whispering in someone's ear some tips that they're trying to give them. And this can really just make you paranoid. It also focuses you too much on the short term. If you're a long-term investor, which is the proper mindset to have, you shouldn't really care what's going to happen in the short term. You shouldn't care if the stock is going to fall in for the next 3 months. As long as you know that in the next 3 to 5 years, they will be successful. So just overall, Wall Street can be really overstimulating, like he said. There's just so much going on. There's so many distractions. Everyone's trying to whisper in your ear. There's just so many secrets going on. You never know what's really happening. And he finds that just focusing on what a business is worth is all you need to do.
What is the intellectual process?
The intellectual process is defining your area of competence in valuing businesses, and then within that area of competence, finding whatever sells at the cheapest price in relation to value. And there are all kinds of things I'm not competent to value, but there are a few that I am competent to value.
Another huge point that he just discussed is finding an area in which you have competence in. So what does this mean? Competence means, like an understanding of it. Different areas could be technology. You could have a great competence in that and know exactly what's happening in that area. You know what all the top new tech that's coming in, what is going to happen, are people going to like it. You can predict the future almost. But your competence could be in car manufacturing. You could be saying that Tesla has the best future because of their, new electric cars that are going to be taking over companies like Ford or Chevrolet. So once you have that area, say it's technology, he then discusses to find a company that is undervalued. So you can go through, each of those companies in that area. All those technology companies could be Facebook, Twitter, Snapchat, Microsoft, Apple, whatever it may be. And you go through and find whatever is most undervalued. Using your statistics, these variables here, read all their news articles, read their quarter earnings too. Just read everything you can about it and try to see if you can picture their vision and believe in it as well.
Have you ever bought a technology company?
No, I really haven't.
In 30 years of investing, not one?
I haven't understood any of them.
So you haven't ever owned, for example, IBM?
Never owned IBM. Marvelous company. I mean, a sensational company, but I haven't owned IBM.
And so here is this technological revolution going on, and you're not going to be a participant.
Gone right past me.
Is that all right with you?
It's okay with me. I don't have to make money in every game. I mean, I don't know what cocoa beans are going to do. There are all kinds of things I don't know about, and that may be too bad, but why should I know all about them? I haven't worked that hard on them. In the securities business, you literally every day have thousands of the major American corporations offered to you at a price that changes daily. And you don't have to make any decisions. You have to make, nothing is forced upon you. So there are no called strikes in the business. The pitcher just stands there and throws balls at you. And if you're playing real baseball and it's between the knees and the shoulders, you either swing or you get a strike called on you. If you get too many called on you, you're out. In the securities business, you sit there and they throw U.S. Steel at 25 and they throw General Motors at 68, and you don't have to swing at any of them. They may be wonderful pitches to swing at, but if you don't know enough, you don't have to swing. And you can sit there and watch thousands of pitches, and finally you get one right there where you want it, something that you understand, and then you swing. And
So you might not swing for 6 months.
you might not swing for 2 years.
Isn't that boring?
It would bore most people, and certainly boredom is a problem with most professional money managers. If they try to sit out an inning or two, not only do they get somewhat antsy, but their clients will start yelling, "Swing, you bum," from the stands, and that's very tough for people to do.
So something that I see a lot of people do here at university is that when they invest in things like stocks or real estate or other investments like that, sometimes they see what a lot of people are doing and what a lot of people are making money in, and they want to jump in on it too, even if they don't fully understand it. Something important that he said is that don't feel like you're missing out on anything. Especially in the investing world, there are plenty of opportunities, whether it could be, BitConnect.
Be connect! Be connect! Be connect!
I'm sorry. Yeah, it could be Bitcoin or something like that, something super risky. And that may be the future, maybe make a lot of money. But as he said, he doesn't understand technology, he never has. So why would you invest in it? Why would you invest in something you don't understand? So you need to find your competency and go and swing at it. And this also has something to do with having laser focus. Laser focus. You don't want to be distracted by all these other investments that you don't understand. You want to pick one that you truly, truly understand and take your biggest swing at it.
Warren, your approach seems so simple. Why doesn't everybody do it?
Well, I think partly because it is so simple. That the academics, for example, focus on all kinds of variables. Partly
By
because
academics, you mean professors of
right,
finance?
the data's there.
In business school?
Sure, and the data's there. So they focus on whether if you buy stocks on Tuesday and sell them on Friday, you're better off, or if you buy them in election years and sell them in other years, you're better off, or if you buy small companies. There are all these variables because the data are there, and they've learned how to manipulate data. And as a friend of mine says, to a man with a hammer, everything looks like a nail. And once you have these skills, you just are dying to utilize them in some way, but they aren't important. If I were being asked to participate in a business opportunity, would it make any difference to me whether I bought it on a Tuesday or a Saturday or an election year or something? It's not what a businessman thinks about in buying businesses. So why think about it when buying stocks? Because stocks are just pieces of businesses.
And the last point that he ends with is about the statistical variables again, like election years, what day of the week, what hour, whether it's I even heard my professor say about when there's an extreme storm happening, sometimes the stock market fluctuates like crazy. People just don't like uncertainty, but it's not what good business people should think about. It's really not. Business people should think about the present value of the company. They should know the ins and outs of the company, and they should know the company's vision and the future, and whether the market will fit into that future. For example, you see Coca-Cola. Coca-Cola is struggling right now because the sweet beverage industry, sadly, because I love soda, is struggling, and people aren't going to be supporting it as much. I feel like that things like Coca-Cola are going to keep on going down and down. Meanwhile, Pepsi is diversified into food, and you'll see a lot of their success because of that. But Coca-Cola hasn't invested in any food. It's all just been drinks. And as much as it pains me to say, sugar drinks aren't going to be, they're not going to be as popular as they once were. But if you feel differently and you understand the vision, then you should invest in that, especially because Coca-Cola has a cheap price. Maybe that is, I was even considering it a couple days ago, maybe that is the best buy that you can make. I'm not sure. But anyways, guys, to wrap up, Warren Buffett's main points, Know your competency. Know what area you're an expert in. Everyone is an expert in some area, whether it's fashion, whether it's, cars, technology, whatever it may be. Know where you're good at, and then find an undervalued company. Know the present value of the company. Know the ins and outs. Know what it's worth. Study it. Know everything you can about it. And if you believe in it, then you'll buy into it. And invest for the long term. Don't just invest in the short term. I hope you enjoyed this video. Warren Buffett is just a phenomenal investor. Probably one of the best investors that we'll see of our time. He followed these simple strategies. A lot of people don't follow them for some reason. They just think it's too easy. But you guys can. I'll post a video every single week on this channel, so stay tuned. My name is Caden Woodtook, and I'll see you guys next time.